Welcome Business 110 students. We're going to talk in a couple of videos about three financial statements and how to read them and interpret them. So we're going to talk about three key financial statements. There's several more, but we're going to talk about the income statement, the balance sheet, and the cash flow statement. So what we're trying to accomplish this is sort of look at these three statements and try to understand what it's telling us. So I always try to say, ask yourself, what would you want to know financially about a company that you might purchase or might want to invest in? So what questions would you ask? Well, if it was me, and questions that are answered on the income statement. Now, just as a reminder, an income statement is our revenue, everything we sell, minus all our costs and expenses. So like salary expenses, wages, materials, taxes, advertising, all of our expenses. And the difference between our revenue and our expenses is our net income. How much money did we make after expenses? So a couple questions I would want to know if I was going to buy a hot dog stand or a pizza parlor is, well, are the revenues growing? Is your business increasing? Is it getting larger? And at what rate is it getting larger? I certainly would want to know, is the company making a profit? Do you make money at this thing? And the third thing I would sort of want to know, amongst several other things, is does the company have a high profit margin? In other words, when I look at for every dollar of sales, how much money do you make? It's called return on sales, net profit divided by the revenue, which tells us, for example, for every dollar of sales, we might make 5 cents of profit. So certainly the higher that number, generally the better. So let's look at a couple examples, and you can do any of this. You can go out to Yahoo Finance and public companies. All of their financial data is known on the income statement, and I'll show you how to do that. In fact, I think I'll pause the video right now and show you how to do that. So I just went to Yahoo Finance. You can go to several places. Let's look up Sears. So I see Sears holding company right here, and you can see it pops up. And if I slide down here to financials, I can click on their income statement, and I get all of their income statements right over here over the past several years. And you can see I can slow down. There's the total revenues. There are all the different kind of expenses, and right down here you see is the net income. Okay, now I'm going to pause it and go back because for our class, in an accounting class, you're going to worry about all these different categories of expenses. For our class, we're going to worry about total revenue and net income. So all I've done here is taken Sears, there you can see the symbol for it, and I've summarized the last 3 years of revenue. And as you can see, in Sears' case, the revenues are going down, they're declining. Now, if you wanted to know the growth rate, you could do the current period minus the prior and do the math, or you can simply go to an online calculator. But Sears' revenues are declining by about 10% a year. So the business is shrinking. So that's not great news, but it's an important thing we can learn from the income statement. Another example, I've done the same thing, went to Yahoo Finance and took a look at McDonald's. A little bit more moderate growth here. You can see, and these are in millions of dollars. So this is, quite a bit of 27 billion, but you can see about 2% growth. Chipotle, quite a high growth rate, right? Smaller numbers, smaller revenue numbers, but you can see a growth rate of around 18-20%. So, first question I would ask is the business growing or is the business shrinking? In the case of Sears, it's shrinking, and in the case of McDonald's, it's moderate growth. In the case of Chipotle, it's quite high growth. So the second things I'd want to know is the company making a profit? So again, we went to Yahoo Finance and took a look at some of these. Here's Sears. There's their revenue. There's their net income. Brackets in accounting generally means negative, so they're losing money. And then I just simply did a return on sales, which is simply the net income divided by the revenue, and put it on a percent basis. So what this is telling us is for every dollar of sales Sears has, they're losing 4 cents. Or again, not a great story. They're unprofitable. They're not making money on their business. Kroger, grocery store chains, very moderate, low profit. They're making money, making quite a bit of money. But from a percentage point of view, it's relatively low. Now, that may be okay because grocery store businesses do very high volume. So that might be okay. And in the case of a Walmart, it might really be okay. Remember, this $16 billion in earnings, right? So the fact that they're only earning 3% on revenue because they're selling $476 billion every year is just fine with me if I'm making $16 billion. A couple ones that have very high profit margins and high, the average company only makes 3 or 4% return on sales. So 8% is quite good. Here you see Exxon, their revenue, their net income, and their return on sales. And it's important to look at the trends over time. Here's Apple, very, very profitable, high profit margin. So that takes the income statement. Back to this, we've kind of answered some of the questions of very easily you can look at it and see, is the revenues growing? At what rate? Is it making a profit? And what's its profit margin? That in and of itself from the income statement tells us a lot about our business. Thanks. Any questions, let me know.